Let's build a custom strategy to analyze any stock. So here we are at valueglance.com. We're going to go to the sidebar here and click on Stocks. Put in your favorite company. Let's take a look at Nike. So here we are on the data visualization feature where we can see long-term trends of key fundamental metrics. So we can go back decades here. And what we're looking at is the quality button here, lit up. We can see the ROIC in blue compared to the cost of capital in orange. If we were to click the value button, we can see the hype factor in green compared to the equilibrium hype in purple. And so we analyzed these in other videos, and we looked at how to incorporate the trading quadrant. In this video, we're going to see how we can customize our conditions for what is a good company or a company that is undervalued versus overvalued. And so previously we saw how the ROIC above WACC, the cost of capital, was our condition for a good company, and Q, this hype factor below the equilibrium, was our condition for undervalued. But you may want to customize that, and that's where this good conditions box comes into play. So let's say we want to look at the quality ROIC, and we don't want just this condition ROIC above the cost of capital. Maybe we want to be a little more aggressive in terms of what's a good company. So for example, we can shift the cost of capital, let's say by 5%. And what we'll see across the data over time is that there is this dotted line now, which is shifting the WACC up. So this is a little more aggressive condition on quality that the company has to meet. We can also do a fixed amount shift. So for example, let's say 15%. And what we'll notice here is that we're moving the line up uniformly. And so this new dotted line corresponds to 15% as our filter, and that's reflected in the trading quadrant. And so we see with this new filter, even though the ROIC was above the WACC over here in May 2000, it's still below this new limit of 15%. So this is a way where we can customize the quality filter. Now what about value? So here we can do the same thing for the hype factor. So let's say we want a hype factor of, let's say 5. So now we see that there's this new dotted line here at a fixed value of the hype factor 5. And so with that condition, we modify the undervalued and overvalued condition in the trading quadrant. And so that changes what we would call undervalued versus overvalued based on personal preference. Now there's another way to filter value by the hype rank. And so we'll talk about hype rank in another video, but the idea here is that we can look for when the company was historically at its lowest values. So a hype rank of 20 means that 20% of the time, hype factor was below this value, this dotted value here, and 80% of the time, historically, it was above. Now, based on this metric, there were only 3 opportunities to enter: 1993, 94, 2000, and 2009. So over 30 years, there were 3 buying opportunities where the stock was historically very cheap. And so if we put the price on there, we can see, yep, if we got in 93, 94, would have done great on that price swing. 2000, maybe not so much. And getting in after the crash, 2008, 2009, would have done very well. So hopefully you can see this is a great way to use the good conditions modification reflected in the trading quadrant to customize your quality and value filters based on your preferences of how aggressive you want to be in analyzing any stock.